Good afternoon, traders. This is an update on my swing trades. If you've seen my other videos on swing trades, you know that I swing trade SPLG and ARKK. They're both ETFs, very different though. And I only use Webull to plan and chart these trades. Not because Webull's not good for this, they're great for this. And if you're interested in getting into swing trading, I would definitely recommend using Webull or a similar commission-free brokerage. But just to keep my day trading separate from my swing trading, and so when I show you guys my results at the end of my day trading, that you know that it's strictly from day trading only, I'm using a Chase trading account, which is pretty crappy, but it's very convenient for me. And again, it's just a matter of keeping things separate. But so the account started at the beginning of the year with $500. It's up $525 right now, which is 5% gain, which is pretty good for a swing trading account because the gains aren't going to be as great as day trading. And if you try to make 5% in one quarter in the bank, it's impossible. Even in a year, you're not going to be able to make that, even if you were, investing or have $250,000 in a CD or something like that. They're not going to give you more than maybe 1.5 or 2% right now, probably more like 1%. And you're not even going to beat inflation at that point. So you're basically losing money. So anyway, unfortunately, this is so featureless, this Chase account. The only thing I could really show you is this line chart where I started here the account with $500 on January 7th. I didn't do anything with the money because there were no entries on those two ETFs that I'd like to swing trade until February. And then, it's a bit of a roller coaster ride as I get in and out of trades as my plan tells me to. And things just kind of went up and down and back up again all the way to 520 and then back down below what I started with just by a few dollars, and now we're up to 525. And even when these two trades end, even if they stop me out tomorrow, there's no way that I'm going to drop below 515 at this point, which is still a 3% gain. And again, that's great compared to just investing in the bank. But there's no telling what can happen in the future trades. But let's look at the charts now and talk about my different entries and exits. So SPLG, my first entry was back here for the break of this daily candle, and then I followed the 50 MA. So somewhere around 44.28, and then I got stopped out here at 44.70-ish. So not a big gain, but not a loss either. And the idea is, for this trend to continue, and it just hasn't because this thing is pretty overextended at this point because it follows the S&P 500, and this is the SPY, which does the same thing. You can see that it made this really big move back here and came down and touched the 50 MA, and ever since that, it's just been kind of doing this kind of bouncing off of it in shorter term periods. So it is what it is. And every time it comes down below the 50 MA, it stops me out. Then I get back in when the daily candle makes a new high. And generally that works out pretty well. Back here on the next entry, actually, I guess my next entry was right here. And I got stopped out a few days later for a small loss because you can see the price was up here at 45.33 and then down here at 44.75. So 60 cents per share I lost there. And then got back in over here. Stopped out over here, but that time for a small gain. And now I am back in it for the break of this candle. And now, this thing's running up pretty strongly. We don't know how long this is going to last. And I'm just, again, following the 50 MA with my stop loss. So right now, if it came down today, which is pretty much impossible for something like this to move that much in one day or half a day right now, I wouldn't be green on this, but it would be an extremely small loss of about 20 cents per share. So it wouldn't knock out too much of my gains from the ARKK trade, which is going to be green no matter what, because my entry right now was for the break of this daily candle. Again, this one I kind of got in and out of a few times since I've been swinging it. And I think there was a couple of green trades and a couple of red trades at this point. And again, unfortunately, Chase doesn't really let you track that stuff very easily. And to be honest with you, I'm not tracking it that well with a spreadsheet. You know that I track my day trades very religiously and very particularly with a lot of detail. And the swing trading thing is just kind of like a little hobby on the side for me. So I am not tracking it quite as carefully, but I do trade it with just as much discipline as you see me with my day trades. So anyway, I got in for the break of this candle back here And then I think once the price, no, I remember exactly, once the price came up above the 100 MA, I made that my stop loss and got stopped out over here. So that was a pretty nice little gain of, let's see, 118 to 124, I guess about $6 per share. And then I believe I got back in when this candle made a new high, and then I got stopped out probably for the break of that candle. So that was a small loss. Looks like maybe $1.02 per share. And then the next entry would have been for the break of this candle, and that was a little bit bigger loss because I believe I probably got stopped out. Yeah, or no, actually that was probably like a break even or very close to break even, because I would have put my stop loss at the bottom of this candle. So then here, this one was the one that was a fairly decent loss, because then I bought for the break of this daily candle and I got stopped out over here. So that was a loss of about $4 or $5 per share. So that was the biggest loss I've taken on this stock so far. But then I got back in, as my plan tells me, as each daily candle makes a new high. I got back in on this one, and I moved my stop up to the bottom of this candle the following day after this one formed, and now it's essentially really at the top of this candle instead of the bottom of this one, just to leave it, to give this a little more room, because this ETF is very whippy, very choppy. You can see it just likes to chop around a lot, and I would just like to give it a little bit of room, just, you know, to a certain extent, because you don't know when this thing is going to just flush back down and reverse. So I'm not going to move the stop loss any lower than it is right now. And you can see at this point I'm up about $7 per share on that trade. So that's what I mean when I say the account isn't going to fall below 515, because I'm guaranteed at least that much. And if this thing continues on higher, you know, we'll see how far this thing goes. I would love to see it break over the 100 MA, and then that'll become my stop loss. And ideally, it'll stay above the 100 MA like it's done in the past. That doesn't mean that it has to, though. You can see that in the past, it's come down and clipped the 50 MA quite a bit, but once it got over the 100 MA, which was quite a long time ago now, back in basically a year ago, it never really came back down under it again. So that's where that idea comes from, but that doesn't mean it's going to follow that again. That's just what I would like to see happen, and that's how I'm planning this trade. So anyway, I hope you guys learned something from this. The swing trading is quite different from the day trading, but the one thing that is the same, and this is extremely important to understand, is I have a strict plan. You can see back here that I always write out a plan before I enter the trade, and I follow that plan no matter what. Same thing over here for the ARKK. And that's really the only way you're going to keep yourself from blowing up your account, because, you know, like if you just hold and hope and these things flush down against you, like for example, ARKK had a big, huge drawdown from all-time highs. And I know there was a lot of people that bought up here, and they're still holding from that area instead of taking a stop, you know, when it breaks a certain level and then trying to get back in to catch the reversal. They're holding these stocks, or they're averaging down as this thing goes down. And that is just not a good thing to do, because it's going to take so long for this thing to come back up and make you green again that it's just not going to, it doesn't make sense. Simple as that. So I think it's better to have a plan, have a stop loss in mind, and when you get stopped out, take your stop and then get back in at the next entry according to your plan. Simple as that. So always take your stop losses, honor your profit target. You should be green in the long run. Take care.